Hey there, fellow traders. Can I just say, prop challenges can really be a roller coaster of emotions.
Push, and it hit the target, and we hit our profit target. No stupid scalping, no day trading, normal swing trading.
I mean, seriously, I've been documenting every day of my True Forex Funds challenge, and let me tell you, the past 2 weeks have tested me to the core.
And yes, we are dropping. Now it looks like we are getting stopped out. We are really close.
It's been one wild ride, my friends. And guess what? We are talking about a jaw-dropping $400,000 on the line here, no kidding. Now let me tell you about last week's nail-biting drama, the precious metals dump. My platinum position was hanging by a thread, just one hair away from hitting that dreaded stop loss. But guess what? I didn't back down. I survived, and guess what? Here I am, still standing, ready to share all the thrilling details with you. But before we dive into all the action, let's start with a proper introduction. Allow me to introduce myself.
My name is Bernd. I started trading futures in 2013 and CFDs in 2019. Later on, I started accumulating max allocation accounts like it's Halloween candy. I took 5 prop firm challenges since, and I passed each and every one of them. This is not a coincidence. I actually cracked the code with this swing trading strategy. I developed this technique over the past 10 years, and the reason I know it's a unique method is because not many traders know this. Maybe a few who traded both futures and CFDs on the same time frames I trade. I admit, you will not find it straightforward at first because you will have to spend some time analyzing the underlying assets over the continuous unadjusted charts. You can do this for any asset class you would like to trade. For me, I did this for gold and the US30. I assure you, once you master this concept and have the necessary tools, you will own a foolproof method of passing prop firm challenges and making lucrative trades. And there's no better place to show you the fundamentals of this strategy in action except on a live prop challenge. This 400k beast of a challenge has been stubborn with me for the past 10 days. So it's time to strong arm it using my strategy. Let's see how it will go.
This week, I must confess, I embraced a calculated risk fueled by the unrivaled power of my fundamental and technical supply and demand chart analysis. You see, in the thrilling world of prop trading challenges, playing it safe just won't cut it. Calculated risks are what separate the winners from the rest.
Life is this. I like this.
Now let's talk about the stakes. In this challenge, we have a strict daily drawdown limit of 5%. I'm a calculated risk taker, putting 2% on the line with each trade. If I have 2 positions open on my platinum trade, that's already 4% in the danger zone. But hey, no worries, it won't push me over the limit even if I get stopped out. However, if I were to have 3 open positions, that's when the thrill amplifies. Picture this. A 6% risk, a heart-pounding scenario that could potentially push me to the edge of failure. But hey, we all know lightning rarely strikes 3 times in a row, right? Well, my friends, on these very trades, the possibility of such a dramatic outcome was very much real. But why, you may ask? What was the logic behind this audacious move, this adrenaline-fueled risk? Was I playing Russian roulette with the challenge itself? Buckle up, folks, as we unravel the secrets behind this high-stakes decision. Let's uncover what went down in this gripping tale.
All right, ladies and gentlemen, welcome back to another week of our True Forex Funds YouTube challenge documentary. Today is the start of week 3 and it's day 11 on the 22nd of August. Actually, to give you some heads up, today is already week 12, but it's early morning. So what I'm going to do this week, the completed previous day, so I can also analyze the completed previous day candle. It just makes more sense if I do it early morning of the next day. So that's what I'm going to do throughout the whole week, just to give you some heads up. Now, what happened yesterday, I entered a new position. After 2 weeks being in platinum, I entered a new position. I entered gold XAU USD long, also swing trade, and also 2% risk exposure. You see it down here, I'm already up by a little bit, roughly $1,000. It's balancing out the platinum position that is still running negative, predominantly due to the high swaps that we accumulated throughout the past 2 weeks, more or less. I will go through the gold analysis another time throughout the week. We will have enough time. My fundamental analysis and my technical analysis, why I entered that position. Today, let's discuss something else. So it's another precious metals position. So what are the precious metals that we have in the financial market? We have gold, silver, and we have platinum, palladium, at least the markets that we can trade with the prop firm here, True Forex funds. So they're all kind of a little bit correlated. So when gold, let's assume gold rallies 3%, they're all going to rally, and if gold drops 3%, they're all going to crash, right? So now I have to be aware of the following. I have 6% risk exposure here right now, and all in the precious metals market, right? 4% in platinum, 2 positions, and 1 position in gold, 2%, so overall 6%. So my daily drawdown limit is 5%. So I have to play devil's advocate here. And in case the precious metals market crashes, it could potentially happen. Is it very likely? Well, everything is based on probability. So is it likely? No, but everything can happen in the financial market. We have to be aware of that. So if the precious metals market crashes, if everything goes south, I could hit my daily drawdown limit, and the challenge is over for me. So this shouldn't happen. So the only thing I have to do is to observe the market a little bit more closely. And in case I see the market is going to crash, I have to be in front of the screen, and I would need to exit the positions manually so I don't lose more than 5% in one day. Again, it's not likely at all, but again, we have to have the awareness, and we have to have that plan B in place as well in case an unlikely event is going to happen. So I'll catch up with you tomorrow, and let's see what happened today. All right, guys, talk to you tomorrow. Bye-bye. All right, ladies and gentlemen, welcome back to our True Forex Funds YouTube challenge documentary. It's week 3, day 12 that we're going to review today on Wednesday, the 23rd of August. Now, as you can see, the P&L, overall P&L, way more digestible compared to last week. We are in profit, 1%. Unrealized, obviously, everything is still running, platinum and gold. As you can see, now platinum is at the entry of the add-on position here. What we can see here, and this is really important, that we kind of created now some barrier for price to drop. All right, so we have a classical bottom. I hope it's going to be one, a classical bottom demand reversal here. We have created a drop base rally followed by a rally base rally, which is called a level on top of level. So price is not able just to fall through in case it falls back. It's just basically here stopping. If price comes back, it will stop here at the rally base rally, daily rally base rally, to basically then continue to go up. So that's at least the concept here, right? Similar to if you look here when we had this drop base rally followed by this rally base rally, in this kind of uptrend move, when price comes back, it cannot fall through that whole area because here you have immediately that rally base rally. So similar concept to here. All right, and gold is also up, not decisive yet, so we definitely need here a decisive move, explosive move here. Otherwise, this could also, well, again, devil's advocate, it could end up to be just like a bear flag and then continue to drop. So we need something here, institutional, something really decisive. All right, so it looks good. So maybe you remember in the YouTube video, how I managed $2.4 million, I called this demand zone here on gold, here XAU USD, the spot price, right? And you see here, oh, it broke that demand level. As you can see, this daily demand level here on XAU USD, it broke that level. Now, if I look at the futures, I'll show you. If I look at the futures here on the daily chart, it broke that level here as well, but it went to another demand level down here. Anyway, that's not the topic. The topic is it broke that demand level as well. But now, surprise, surprise, let's look at our custom futures charts, what are called unadjusted charts. And this is the charts that we use and we have to use when we analyze futures. So now, let me open it and surprise, surprise, let me make it a little bit bigger. You see, here we are still in the middle of that demand zone. So that's why I'm always saying when you trade spot Forex, CFDs, you have to analyze the underlying asset, which is the futures, and not only the futures, the adjusted charts, you have to look at the custom charts. Look at this gold chart at GC equals 120XN plus JMQZ. What does it mean? Well, this is something I could explain in another video, but this is something that we teach in our futures course at Online Trading Campus. All right, you see here, we are still in that level. We are still moving from that level. So we are in that demand zone. It's not only daily, it's also here. As you can see, drop-based rally coming from that weekly demand. So it's daily covered by weekly, big brother, small brother principle, perfect. All right, ladies and gentlemen, welcome back to our True Forex Funds YouTube challenge documentary. We are still in week 3 and today we review day 13, which was yesterday, Wednesday. All right, today is the 24th of August. And what do we got this morning? You can see the unrealized P&L increased nicely yesterday because we got a rally in platinum and in gold. So based on the unrealized profit, we are halfway through, right? Remember, we don't have to achieve 10% on the True Forex Funds challenge. We have to achieve only, quote unquote, only 8%. So 8% on a 200K account is 16K. Now we are up 8K, but it's all unrealized. So this could change any minute, right? Up and down. So it doesn't mean anything. Now, in terms of trades now that are running still, platinum and gold, I think they still have some juice in it. Why? We're going to go through that obviously as well. But what we see here is on platinum now first, we have now another nice decisive candle to the upside, institutional candle, which is important because we created some demand here and here. We have that nice bottom reversal, drop-based rally followed by rally-based rally, that level on top of level, which is protection for us in case price returns back and retraces. All right, but this looks like a nice impulse move here to me, right? We could get a correction, but then we have demand where from this demand zone we would get another impulse. So looks healthy, a very healthy move. Now on gold, again, we saw now also yesterday this, what I was teasing as well, this needed impulse move, this institutional explosive move. This is really explosive. So we have here now also protection, a nice drop base rally, okay? And so we also have some juice in it here, still left. Now, why do I think we still have some juice in it? We can now obviously start going, let me go to TradeStation here. And just we finished today the technical part And then tomorrow we can also go into the fundamental part on gold. But first, again, platinum, you see how we broke out of this challenge. And this is what I was just saying. Now we have here another demand zone, which is really important for us. Let me do a little bit here up. All right, so now we have that nice demand zone reversal. And we talked about the valuation versus gold, not versus gold, versus the US dollar, which is the purple line here. And we are not close to overvalued. So either we're going to get out up here or we're going to get out once we're overvalued, because once we're overvalued, this is where price usually, you see here, price usually turns. Right here, you see it better. Now where price turns here, overvalued, turns here, overvalued, starting to turn, here, overvalued, starting to turn, here, overvalued, starting to turn. But we have to choose until up here or until we are overvalued. So we can observe this on a daily basis. That's not a big deal. Now, on gold, remember, the only chart that was in demand, in that high quality demand zone, was the unadjusted continuous gold chart. All right. Now, here, if I open that gold chart, again, here we also nicely, if I can show this here, we had this stair stepping down and we broke through this parallel channel, which is now also, of course, super bullish. And we created a new, now I can highlight the wider version here, the demand zone, all right? So also super now bullish, because we basically broke out of this channel in an explosive fashion and we created new demand. So even if price comes back here, we don't have to worry, this is protection, then price can, from that level, can rally again. All right, so it definitely looks good here. Let's see what today, Thursday, brings, and we're gonna review day 14 tomorrow, and then we're gonna go also through the fundamental aspect of why this gold trade is such a good trade. All right, guys, I'll talk to you tomorrow. All right, ladies and gentlemen, welcome back to our True Forex Funds YouTube challenge documentary. We are still in week 3, but week 3 is slowly coming to an end. Today we review day 14, Thursday, today on the 25th of August. And you see what happened yesterday. Not much. You see it here based on the P&L, still 50% up, 50% remaining, $8,000 still needs to be accomplished, another 8K, right? Now, you see it down here. I placed another trade on US30. I most likely going to get filled today. We're going to see yesterday a little bit of volatility, and today I expect volatility in these markets as well, because Fed Chair Powell is speaking now. But so I expect to get filled here in that on that long position on the US30. So there's not much to talk about on these trades. They're pretty much stable since yesterday. But what we can do, we can go to TradeStation and we can talk about my step 1 of my 2-step analysis process. Step 2, we now analyzed on gold how I time the market. All right, we talked about this. Always the analysis happens on an unadjusted continuous futures chart. The underlying asset is really important, that you are able to analyze the underlying asset, and then not only the continuous chart but the unadjusted continuous chart. Then do your supply and demand analysis, and you can also add some conventional technical analysis. But look at this step 1 using our proprietary indicators in order to get bullish, bearish, or neutral. Smart money index, right? We want to trade with the smart money against the retail money. And look at this now here. So you see the green horizontal line and you see the red horizontal line. So these are the extremes. Green means bullish, red means bearish. And the blue line represents the smart money, and the red line represents the retail traders who usually use. And look, basically, they're crossing here, and the blue line is getting bullish, the smart money, and that's why I was like, my alert bells went on, and that's why I wanted to get into this trade. And the icing on the cake is basically that the retailers are slowly getting bearish. Now, if we do some back testing and look in the most recent history, what happened once you see here what happened. Here the retailers were bearish and the smart money was bullish, and this was the low here, and then we got this monster rally on gold. Here we had the retailers, you see they're also bullish, so retailers are not always wrong, but most of the times. Here the smart money, and this is where we get this small green candle formation. We don't need a lot, by the way, right? We just need 1 or 2 red-green weekly candles, and this would give us a very nice risk-to-reward ratio. Here, also, you see here, smart money bullish, retail money bearish, and this is where you get also this nice weekly move. Here again, you see smart money bullish, retail money bearish. You get this nice green candle formation on a weekly basis. Here, again, only smart money. You see here smart money super bullish, retail money close to bullish but neutral. But then you get this very, very nice move up. And look at this here. Eventually here, after bullish for a while, retailers super bearish. You get this bottom of all bottoms here, and this monster rally from 1600 to more than 2000. And now, a surprise, look at this here. And by the way, it can be also the opposite when you look at here, for instance, where retailers get then eventually bullish, and then smart money is getting bearish, and then you get this nice drop here. So it goes both ways, obviously. But now here, we are now getting bullish, the smart money, and the retailers are getting bearish. So this is basically, for me, a big no-brainer, and like, I have to get into a trade, and that's why I timed that market that way. All right? So smart money index, knowing what the smart money is doing, knowing what the dumb money is doing, very, very important. All right, ladies and gentlemen, welcome back to our True Forex Funds YouTube challenge documentary. Today we are reviewing the last day of week 3, day 15, and today is the 27th of August. All right, so first things first, let's look at our P&L. You see we are moving in the right direction. We are 11K up, 5K more to go. We entered a new position on the US30, on the Dow Jones. Picture perfect entry, and then price went higher on Friday. We're gonna go through that step by step in a second. Let's review the other positions. Now, we are here, Platinum. We had a lot of volatility on Friday again. We had Fed Chair Powell speaking, so especially on the precious metals as well. We saw a lot of volatility, but eventually we were heading higher. And you see now, we created another rally base, really another nice protection here. So my stop losses, today it's weekend, I cannot move my stop losses higher, but my stop losses will now go below that rally base rally on Monday. If I look at the weekly candle, you see bullish candle. After that weekly reversal, pin bar, hammer candle, as expected, as anticipated. And now eventually, as we also anticipated, price was following the fundamentals, right? Really important. Now we have our targets higher. Let's see how much higher price has to go. We have 3/4 positions open. I mean, we have 2 positions on Platinum. So overall, we are exposed to 3 different markets: Platinum, gold, and now also the Dow Jones US30. Here, that's what I meant with volatility, so we dropped lower. And this is also, I was teasing, or I was emphasizing in we need that kind of protection, right? We don't like price just running straight up without creating any kind of protection in the sense of a new demand zone. And you see here we had this drop base rally, and price came back into that drop base rally and then continued higher, right? And this all happened on Friday. So the close is okay. And here as well, you see a nice candle, weekly candle. It's not a fully, unfortunately, it's not a fully reversal candle, a bullish engulfing, but definitely we can also expect price to go higher. Obviously, you see targets up here. We don't need price to go all the way up here. We are up 11K. We need 5 more K. Let's see how far this has to go higher. And last but not least, Dow Jones. Look at this nice entry here. Price came in on Friday, and then we really rallied out. Basically, that drop base rally here. This is my entry position. Stop loss below that daily drop base rally. Again, a swing trade, and again 2% risk here in that market. Why did I enter this trade? Let's go through the fundamentals here, especially through the fundamentals, because they're really important here on TradeStation. You see here that drop base rally. This was the was the daily demand zone. Let's look at the valuation tool. So what we do is here we use here on our valuation tool the treasury bonds, and of course gold and the dollar. So the blue line indicates the treasury bond. So ideally we are undervalued versus the treasury bonds. So first and foremost, this is the most important valuation measurement, the treasury bonds. We have to be undervalued versus the treasury bonds. However, when we are undervalued versus all of the 3 assets, treasury bonds at US, gold at GC, and dollar DXY, the US dollar, then we are getting the best moves. And look at this in the history. And this doesn't happen. And by the way, it doesn't happen very often. So in the recent history, let me move this somewhere else like this. All right. So look at this in the recent history. Here we were undervalued versus dollar, purple line, yellow, gold, and blue line, the treasury bonds. And look what happened. We get this nice move here. Here as well, undervalued versus all the 3 assets. Look at this, we get this crazy reversal. Here as well, look at this, undervalued versus the 3 assets. We get this nice rally. And now again, look at this, we are undervalued. We are undervalued here as well on the 3 assets. So I expect here price to go higher back into this daily, weekly supply zone. So my overall targets are obviously, we don't need price to go all the way up here, because we only have to, quote unquote, only have to achieve 5K more, but we need a nice significant move to get price up here. But overall, these are generally my targets. All right, that's it for day 15. So let's see what week 4 brings, and excited for week 4, and talk to you soon. Bye.
What an absolutely mind-blowing week 3 it has been. Hold on tight, because I've got one sentence to sum it up. Quality over quantity. That's the game changer. Let me tell you, my friend, choosing top-notch trade setups that perfectly align with your rules is the ultimate secret sauce. Trust me, this can't be stressed enough. Now picture this. It was an absolutely breathtaking sight seeing everything unfold right on my screen with those trades. I meticulously handpicked trades that not only had solid technical foundations, but also boasted rock solid fundamentals. And that, my friend, is the real secret sauce. We combine essential fundamental indicators with powerful technical tools like supply and demand to time the market with absolute precision. And guess what? When both fundamentals and technicals align, the probability is stacked heavily in your favor. It's all about those sweet probabilities. Always remember, my trading warriors, everything we do here is based on probability. No room for recklessness. We never sacrifice probability, not even for a second. And here's the thrilling part. Higher probability means a fantastic risk to reward proposition, because we are all about trading those epic price turns, never chasing the price. So my dear friends, fasten your seatbelts, get ready for yet another heart-pounding, exhilarating week as we navigate this incredible world of prop trading challenge together. As always, I want to extend a massive heartfelt thanks for joining this journey. Stay tuned, my friends, as I catch you in the next electrifying week.